It is with great excitement and thanksgiving to God Almighty that we welcome you to today's episode of Tax Matters, the very first episode of the program in the year 2014. Yes, 2014. A new year is here. We thank God Almighty that we are able to witness a brand new year. The year 2013, the outgone year, had its highs and its lows, but by His grace, we are here. You will recall that in the last two episodes, we've been looking at the high points, the highlights of our offering to you on this program in the year 2013. Today, we will continue. This is the third in the series. You will recall also that last episode, we began talking about concepts and terms in taxation, pre-operation levy, presumptive tax, transfer pricing. And you may want to ask, what is transfer pricing? On Friday, the 21st of June 2013, the Federal Inland Revenue Service put together a workshop on transfer pricing in Lagos. Two papers were presented, one by Mr. Ajayi Bamidele of the FRS and the other by Mr. Taiwo Yedele of PricewaterhouseCoopers.
There are so many interpretations, so many definitions that are being given to transfer pricing. But in simple form, it's just we are looking at connected parties. And there's nothing wrong with transfer pricing. Maybe I should echo that. In transfer pricing, nothing is wrong. What is wrong is transfer mispricing. And when you disclose your relationship, we just test that, okay, if this business has been done with a third party, will it actually have put the result in what you have declared to the government? This regulation was signed in August and gazetted September 2012.
So what is transfer pricing? Imagine for a moment that you bought a plot of land for 10 million naira in Lekki Phase 1 10 years ago. That land is currently worth 50 million naira. If you sell it, how much gain would you have made? 40 million. God bless you abundantly. If you sell that land, your gain will be 40 million. Governments will show up and say, thank God for this, your land. Based on the available records we have, when you bought it, you paid only 10 million. Thank God you have sold now for more than 10. Actually, you sold for 50. Out of your 40 million naira gain, please pay what percentage? 10%. Government shall collect 4 million naira from you, even though government did not contribute when you are buying. But that's what the law says. Again, imagine another scenario. That same land, worth 50 million, you decided that you're not going to sell it for the market price because you're selling to a friend, to your spouse, to your sister, to your brother, your uncle, or your parents, whoever. And you said, because you are my brother, buy this land for only 20 million. And you agreed. You may even have documentation, including agreements. Both of you signed. Everybody signed. It was stamped at the stamp duty office. Your gain has reduced to how much? 10 million. And your capital gain tax should be how much now? 1 million. It was supposed to be 4 million before. Suddenly, it's now 1 million. And government is asking, why should I suffer? Because of your decision to sell this land to your brother, and you refuse to sell it at the market price. You know what? I do not care what you have done. I do not care what agreement you have in place. For the purposes of taxation, I would assume still that you have sold for 50 million. So please bring my 4 million naira capital gains tax. That is transfer pricing. Okay? It's not totally new to us. It has been there before. Only that we do not have detailed guidelines about how to implement it. Okay? But generally speaking, transfer pricing is that price at which related parties, or if you like, call them connected persons, transfer goods, services, intellectual properties, intangible assets, guarantees, loans, and so on and so forth between them. Sometimes the driving factor is to shift your profits from a country where the tax rate is very high to a country where the tax rate is very low if you operate in more than one country as a multinational. There's every incentive for you to play around with prices and costs such that profit is reported in the country where the tax rate is very low, and in some cases where there are no taxes at all, and that's what we call tax havens. Should government fold their arms and allow you to do whatever you like? Answer is no. Otherwise, we will soon get to a point where you have all the companies in Nigeria and collection for tax purposes will be zero. In fact, it can even be negative because not only are they not paying taxes, they are collecting incentives and they have tax credits, filing for refunds. There are some concepts in transfer pricing that you need to be aware of. And Mr. Bamidele was talking about documentation, which is very important. But do not make a mistake. The fact that you have an agreement in place does not mean you have documentation that is acceptable for transfer pricing purposes. Beyond the agreement, there has to be a justification. You're paying management fees. You're paying technical fees. You're paying a royalty, 10%, 5%, 6%, 8%. Who says it should be 8%? Why now? Why are we introducing transfer pricing? Shouldn't we just allow us to worry about the problems we have? No, we cannot do that. Okay, the reason why this is happening around the world is the fact that people need to protect their tax base. You need money for infrastructure, for public security, for healthcare, for education. There's a lot of pressure. And fiscal authorities around the world are now exchanging information more than ever before. And I'd like to just share this with you very briefly. The Economists, some of us read the magazine. They said that Africa is a hopeless continent. The whole world were meant to give up on us, that there's no way we can be rescued anymore. That was a few years back. Today, that same economist says that Africa is rising from a hopeless continent to Africa rising. What has changed is because the world is looking for growth and they can't find anywhere else. And the growth is in Africa because we were almost starting from zero base. The whole world is paying attention to Africa. And when they talk about Africa, the first place that comes to mind is our dear country, Nigeria. We are 170 million people out of about 1 billion. It's like 1 in every 4 person from Africa is Nigeria. We are the China of Africa. We are very important, in case you are not aware. So therefore, because people will be coming to invest, they will say there's no electricity, that there's Boko Haram. They will still come. You know why they still come? It's because there's a level of risk and there's a level of reward. No matter how high the risk is, if the reward is commensurate or a little bit more, people will take the risk. I'm not saying and I'm not suggesting that we shouldn't deal with our issues. It means that if you deal with those issues and your risk goes down, more investment that would have been otherwise not viable automatically become viable. Instead of expecting 10% return, 4% will do. So you have more employment and you have economic growth. So Nigeria has to put in place structure so that as people begin to come in, more of them will be coming. We must ensure that they pay the right amount of tax based on the economic activities they carry out within our jurisdiction.
The conclusion, the advice, Mr. Udele's advice.
First is, even though the law says, the regulation says, you must do transfer pricing analysis and documentation for your accounting period commencing after 2nd of August, which means if your year-end date is December, it affects you only from 1st of January 2013 to 31st December 2013. The returns are due 30th June 2014. You say, why are they now disturbing us? We're still in June 2013. Why can't we rest? You cannot rest. You know why you cannot rest? As you are recording those transactions, you must ensure you are recording the amount that's acceptable. You've recorded transaction already for 6 months. If you now get to June next year and you start adjusting it, you create unnecessary complication. So the time to act was yesterday. Since you didn't do anything, the next best time is today. Do not wait a minute longer.
And in case you still need further clarification, this wrap up.
I will just take 5 minutes to summarize what I heard from the two speakers. One question that Mr. Wedede asked is why TP? Why now? Many of us will know Sabmiller. Sabmiller is one of the largest breweries in the world. And in Africa, the main base is South Africa. But in all the subsidiaries in Sabmiller, the Ghanaian breweries is the most profitable in the Sabmiller group. And yet, that is where the least tax is paid by the group. And the question you want to ask yourself is, then where does the money go? Maybe another example I want to give, I think, which is very close to what Mr. Wedede gave, is about Kenya. The very first successful TP audit they conducted, they made 1% of the GDP from one case. We have seen the example of GSK. I mean, imagine in just one tax audit, over $3 billion US, not 3 billion naira, being made. So that tells you the importance of what we are talking about. And now you can say, oh, for government, that's not a problem. After all, more money is coming into government. But assume that it's your company having to cough out $1 billion US. Can your company survive? I'm talking in Nigeria now. Assuming tomorrow you get an additional, undisputable, unquestionable additional assessment, $1 billion US. How many companies in Nigeria will be able to survive it? And I think this underscores the importance of TP to both the taxpayer and the tax authority. Now, Mr. Bamidele, in his presentation, talked about mutualism. Mutualism is talking about all of us coming together to work at this issue. And that speaks to three major factors. One is transparency. Transparency on the part of the tax authority to say, look, these are the rules. These are the way we are going to do it. Transparency on the side of the taxpayer to say, look, I am not hiding anything under the table. Yes, I have agreed with my principal, my subsidiary, or with my holding company to transfer this product at 1 naira. But because I know it is not arm's length, I will record it at 2 naira because 2 naira is the arm's length price. Transparency on both sides. Good faith is very key as part of the mutualism. That is, both the tax authority and the taxpayers are acting in good faith, both in our documentations, both in our inquiries and examination. Reciprocity is the third element in mutualism. After all, in Africa we say respect begets respect. If the taxpayer is open, why would the tax authority not be open? And vice versa. Another thing I got from Mr. Bamidele's presentation is that there is obligation. I mean, there are obligations expected both from the taxpayer and the tax authority. I mean, when I use the word taxpayer now, I'm believing that the consultants, the advisors, they are part of it. And for FRS, what are the obligations that we can get from what has been presented? One is to provide simplified, understandable, clear guidance. We have been told about various forms, declaration form, disclosure forms. We are having our taxpayer services already been empowered to deal with inquiries. Simplified documentation process. That is, I know if you look at the declaration form that is appended to the TP rule, they appear very, 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 very complex. But indeed, when you look at each segment, they are actually very simple things they are asking us. And I can assure you the TP disclosure forms are going to be much, much simpler. But again, this is something, it's a challenge for us as FRS to do as an obligation. And also is that we must minimize the cost of compliance. When the CD was talking, he said we shouldn't act such that we will compound your business woes for you. We should actually make it lighter. And I think this is a principal thing for us to watch out for in FRS in implementing the TP. And very importantly, we must have a platform for dispute resolution. On the part of the taxpayer, what are the obligations imposed? Voluntary compliance. Where we have full voluntary compliance, over time it's going to eliminate suspicion. We begin to take each other for the face value. But where we have to be coerced before we comply, then even when we come forth, we still begin to doubt whatever we have presented. And this one is very key for us as business operators. From Mr. Oyedele, some of the salient things he has said to us is that TP is not new, and I agree with him. It's not a new type of tax. There's no tax called transfer pricing tax. I mean, there's nothing like that. It's just a method of examination of transactions. And what is key here is to ensure that there are no mispricing. You can't forbid a son from buying from the father or from a daughter from selling to the mother. You cannot legislate that. But what is key here is that when you are doing that, ensure that you use the open market price.
Now you know that transfer pricing is not just one esoteric concept. It is here with us. It lives with us every day.
Every day, my people they for work. Some they do office work. Some get it them own business. So all of them want good road, constant power for better life. Oh, whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook am. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, potable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Welcome back. We're still on our review on what came to you on tax matters in 2013. In the month of May, which as you know, is when we celebrate children in Nigeria, we provided a platform for the children to express themselves. What do they know about taxation?
What do you know about tax?
Tax is the money we pay for the government to repair our social amenities.
What do you know any other thing about tax?
We have indirect tax and direct tax. Direct tax is the tax that the people working under the government are paying to the government. Indirect tax are tax that the people who are selling goods pay.
Tax is the money being collected from like all these machines you see working on the road. You see people collecting the money from them. Those things are taxes.
When they collect these taxes, what do you think they use for, and who do you think they pay the taxes to?
They take the taxes to government and they use it for building roads, houses, and so many things that can please people.
Do you know any type of tax?
Like the salary they pay to your parents, they will remove some tax inside. Like the drink you buy, like you buy 100 naira drink, the tax inside is 5% of it is the value of the tax you give the government.
Tax is the money paid by workers or removed from workers' salary to pay to improve the nations.
Michael, what do you know about tax?
Tax is good. That is good. It is good to pay our tax. We use it to pay. We use it to build our road. We use it to pay our teachers, and we use it to
To let our life better.
Okay. Who do we pay tax to?
To Lagos, Fashola.
Tax are the money that the parents and people living in the country pay to the government.
What do you think the government uses these taxes for?
Use it to build schools, hospitals, schools and hospitals.
Okay.
Tax is the money being deducted from people who work and given to the government for people to use and do good roads, pipes and the railways, the drainage and other things. And again, tax is money which is being paid after you have bought something to the person you bought something from.
Do you know any type of tax?
Yes. Value added tax and personal income tax.
If you were to advocate to me now, if you were to come and talk to me about taxation, how would you approach me? What would you say?
When I come, I'll introduce myself to you and I'll tell you the advantages of tax. And every Nigerian person wants to enjoy life. And if I tell you the advantages of what tax can do for you, you'll be convinced, and within you, you will want to pay tax because you want to enjoy a better tomorrow. And you want to lay a good foundation for your children and your grandchildren. So that's what I'll tell you.
Tax is collected every month from workers' salary, and then it's given to the government in order to use. So the government then uses it to do things for the general public, like roads, building of schools, hospitals, and other things that will benefit the general public.
What role do you think taxation has to play in the economy?
I think it has a big role because soon our oil resources will eventually dry up, and I think we'll have to fall back on tax. So as we are doing now, if we just keep on going the way, and if tax continues to grow as I'm seeing it grow, we can help the nation become a more tax-paying country. And before we know it, our nation would have developed into something great. And those who started this tax club with us, the pioneers, would have been very happy to see that our country is now developed and we are all paying our taxes and helping each other.
Tax till today is one of the major sources of government revenue. And to boost the nation, the government needs revenue. So if you pay tax, you are helping the nation by increasing their revenue.
Every day, my people they for work. Some they do office work, some get it them own business. So all of them want good road, constant power for better life. Oh, whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook am. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Well, I've seen that I have a role to play in paying tax and other things. I've seen my own part that even though I'm not able to pay tax, I'm able to sensitize the public and tell the elders that they should pay tax.
The young shall grow.
Yes, so they have to grow.
It is our prayer also that your business will grow in the year 2014, that your family life will progress, and that you will pay more taxes. What's funny? Don't you know that's how your salary gets paid? May you pay more taxes in the year 2014. See you next week.
Bye for now.
And zero rated. Who is allowed to claim input VAT? If subsidiary has invoiced me, okay, with VAT, fine, I will pay. Then, because I'm exempted, I think it's exempted, I will just go to Inland Revenue, give me my money. It will nil off because the VAT that this man is paying, he has already invoiced holding company. Is that not so? And he has collected VAT, which he has already paid to FRS. Is that not so? Now, the holding company that is exempt and is already incurred input VAT which he has nothing to net it off, he will go to FRS, collect the money back.
As we said earlier, time constraints have forced us to break this story from Shagamu into two parts. Next episode will allow Mrs. Adelegon to remind us of the roles of tax consultants and banks in achieving voluntary and effective tax compliance. She will also remind us of offences and penalties for infractions. Of course, there will be time for more observations from the floor and more responses from revenue side. We thank you most sincerely for spending time today with us on Tax Matters, and we do hope that you'll be here next week, same station, same day of the week, same time of the day. Have a blessed week ahead.